Okay, so the S&P did a powerful top sign just under a major resistance area. This is quite dangerous, however, in order for the index completely frustrate any bullish sentiment, it has yet to break some important support levels. This is a critical moment for the index, so let's start our multiple time frame analysis on the S&P and find some important clues of what to expect next. You are welcome to the Finance Hydra channel. My name is Nathan, so let's start our multi-time frame analysis on the S&P looking at the 1 hour chart. In the 1 hour chart, this pullback was already quite expected because the index, since the previous bottom level over here at 39.28, it went up nearly 4%. So, okay, we see a correction. That's quite normal. What's the problem with this correction? Well, the problem is that we lost a dual support level made by the 21 exponential moving average and the 38.2% Fibonacci's retracement. We lost the 50% retracement as well, and right now it seems we are heading towards the 61.8% Fibonacci's retracement. This is the next technical target on the index in the 1 hour chart because we simply ignored all of the previous support levels. It is going to be quite difficult for the index to actually drop in one single blow and retest the next support level at 39.28 over here. So that would be quite unlikely to see. So it is expected to see some reaction around the 61.8% Fibonacci's retracement, but we'll see, right? We'll see how this will perform. Right now, the most important of all is that the index found a top level under a dual resistance level made by the 4060, the previous top level over here. This key point did work as a support level again, and it seems like it is working as a resistance level once more. In addition, it feels like we are also trapped inside a descending channel in the daily chart. So yesterday we did a bearish candlestick pattern called shooting star candlestick pattern, which is a quite powerful bearish reversal pattern as seen on Bukowski's website. Take a look at this shooting star candlestick important results. In theory, it is supposed to work as a bearish reversal, and its tested performance is of bearish reversal 59% of the time. The above numbers are based on hundreds of perfect trades. So, okay, we see bearish candlestick pattern, a bearish reversal candlestick pattern, which works nearly 60% of the time just under a major dual resistance level. This indicates correction. This indicates pullback. Right now, it feels like we are trying to retest the 61.8% Fibonacci's retracement in the 1 hour chart. We feel it, this gap over here in the daily chart. So only if we see a very good, amazing, incredible bullish reaction above this support area, we might see the S&P avoiding a sharper correction. Right now, we don't see any bullish reaction. It feels like the S&P is just bearish and there is no hope for it but seek lower levels. If it is about to react, right now would be a very good time for it because again, we are just above a critical support level in the 1 hour chart. What if we actually lose the 61.8% Fibonacci's retracement in the 1 hour chart and if we keep dropping in the daily chart? The next technical support level on the index is 39.49, which is this black line over here. This black line did work as a support level 1, 2, 3 times. If we lose this support level, then probably the S&P will just resume the bear market seen in the weekly chart. Because in the weekly chart, we have been bearish since 2022. We have been inside this descending channel over here. And recently, we did a breakout, an upwards breakout from this descending channel. We broke this upper purple trend line over here, which was working as a resistance level many times for the index. Since January 2022, we did an upwards breakout this year, exactly 1 year later, and we tried to trigger a bullish pivot point by breaking the 4100. The problem is we failed in breaking this resistance level. We failed in triggering this bullish pivot point. Right now, it feels like the index could react just above this support level, just above this purple trend line again. However, today's reaction, the recent reaction, has been quite problematic. And of course, if you want to join a community of consistent swing traders, come on, check my website. The link is in the description of this video. Many services. So far, we are doing very well this year. Join our community. Check my website. Link in the description. Now, back to S&P's chart. It is very important to see a bullish reaction as soon as possible. But if we actually lose this support level over here in the daily chart, the 39.49, the index will completely frustrate last week's hammer candlestick pattern, because last week we did a bullish reversal candlestick pattern. We did a hammer candlestick pattern, which is another quite powerful bullish reversal. But if we actually lose last week's low, we are going to completely reject this bullish structure, this bullish thesis, and in this scenario, the S&P will just re-enter this descending channel again, and it will just resume the bearish momentum seen in the weekly chart over here. Therefore, this is why it is very important to see a bullish reaction on the index right now in order to avoid a further drop. This might be the beginning of the next crash, but let's pay attention to its key support levels over here. And of course, if you are still watching this random Brazilian guy talking about the S&P index, come on, subscribe to this channel, click on the like button because you probably liked the content. Why would you still be here? So come on, join the Finance Hydra family. Thank you very much for your audience, my dear friends. Stay safe. Bye bye.